Morning, everyone. This is Rajendran here, joining from Market Calls, and welcome everyone to preview webinar on Converge 2019 Market Profile Conference. It's a residential conference which is happening in Bangalore, JP Celestial, and it's happening on 17th to 19th of August. It's a 3-day residential conference event. This is the 4th edition, and today what we're going to discuss is how do we see order flow, right? And how do we see order flow? And what are the things I am going to cover in Converge 2019 conference. I'm a speaker there in Converge 2019. Of course, I'm a speaker there in all the 4 editions of Converge 2019. Last time in Bangalore, in Converge 2018, I talked about market profile. And this time I'll be talking about order flow analytics. And I'll be bringing lots of strategies on order flow trading. And before getting into the session, just give me a quick confirmation on the audio and video quality. So you can just type it out. Is the audio quality is good or bad? You can just type it out. Okay, great. And end of the session, we're also going to look into what made the Friday crash. Right? How we are able to identify that possibility. What is the possibility that could be a sharp drop in the markets? Even though we don't know what is the quantum of the drop, but did we anticipated that there is a drop in the markets? Yes, we do anticipated that drop. And I'm going to explain at the end of the session how the drop happened and what made the drop, right? Let's get into the session here. So, my name is Rajendran. I am the founder of Market Calls and co-founder of Traders Cafe. So I've been trading in the markets right from 2006 onwards. I've been trading, investing, and I would closely written 3,200 plus articles since 2017 about various technical analysis topics. I've been writing about, right in those olden days, I explored the things like RSI, MACD, Fibonacci, Shimoku. I've been gone through all those levels, the Renko, point and figures. Right now, after over a period of time, I got settled down in 3 topics. All these 13 years, it took me to settle down in 3 concepts. One is market profile, another one is order flow analytics, and probably mostly one of my favorite thing, automated trading. And we also do a lot of system development, indicator development. We do a lot of automation works these days. And my core expertise in the last 6 years has been focused. It's a focused, deliberate practice on market profile and order flow analytics. I've been a trainer as well. I've been training students on varieties of topics like AMI broker or market profile and order flow analytics. I've been training since 2013 onwards. I would have been closely trained so far 750 plus professional traders from a different background. Some of them are institutional background, some of them are from full-time trading background, and some of them are from part-time traders community. Right, and I've been primarily using softwares like AMI Broker for automated trading and Ninja Trader 8 plus Bell TPO softwares for my market profile and order flow studies. And here is my Twitter handle, and you can, if you have any questions post the session, you can always come and ping at marketcalls_. That is my Twitter handle, and email ID rajendran@marketcalls.in. If you have any questions related to trading or any questions related to the algo development or market profile or order flow, anytime you can shoot a question. And most of my trading, right? So most of my trading is mostly a directional. I'm more of a directional trader. I used to trade mostly in index futures and an index option. And primarily, I've been focusing these days on scalping and intraday, especially from index options and index futures. And I also do stock futures trading as well. Right, and whenever I'm doing stock futures trading, I ensure that I don't do intraday. I mostly stick to positional trades when it comes to stock futures. But when it comes to index futures, I primarily do scalping and intraday. And yes, I do trade positional as well, but only if the opportunity is abundant in the markets, then only we consider doing positional trading in index futures. My max to max, my trades will be closed less than 2 days when it comes to index futures or index options trading. And about Converge 2019, I said that it's Converge 2019. We're gonna this time we have 4 mentors. Different mentors are talking on different topics. So last time, Mr. Dean Aniruddha from Dean Market Profile. So he'll be talking this time about market profile. In last Converge, he talked about volume price analysis. He had an abundant experience. He had almost 16 plus years of experience, and moreover, he's a full-time trader, right? And he's going to present topics on market profile. And myself, I've been practicing order flow for the last 5 years, and I've been talking on order flow analytics and how to combine order flow analytics with market profile. Right, so I guess a lot of learnings is very much guaranteed from market profile front and order flow front. And neo wave, it's a very new concept. This time, the Converge 2019 is introducing a new mentor, Ashish Kayal. Right, he's an Elliott wave expert, and he's also a neo wave expert as well. So this time we'll be having an introduction to neo wave and how one should see neo wave and what are the nitty-gritties one should follow, right, when you are dealing with the neo wave, and how to understand that that little bit of nuances in the neo waves. That's what he's going to talk about it. And Mr. J. Chandran, right, he's quite popular for his market profile studies or market profile analysis in the Twitter medium. So he's gonna do live trading session. It's a one complete day of live trading session where simultaneously there'll be a lot of talks, lot of mentor views will be happening. And the core essential thing of live trading is the intention is not to provide calls, but the intention is to show the people how to take a view during the live markets, right? And what are the approach we practiced, or what are the approach Mr. J. Chandran is practicing currently? So he'll be revealing some of the techniques during the live markets, and he'll be explaining why to take a view, how he is taking a view, and what he is anticipating based upon his view or based upon what the market itself doing. And other than that, it's not just a normal ordinary conference, right? So this conference is filled with pre-webinars and post-webinars to onboard you to that topics like market profile or order flow or neo wave. So there are a lot of pre-webinars, almost total 6 sessions, 6 days of sessions on pre-webinars and post-follow-up webinars are there. And apart from that, all the members will have the facility or the to enter into the community webinars, right? It's a lifetime commitment from market calls. So we do a lot of community webinars. We do a variety of community webinars on different strategies or any market profile, any new market profile strategies which we are finding it pretty interesting, or any order flow topics, any new topics we are finding it interesting, or maybe anything which is on automation, or anything which is on Ninja Trader automation or AMI broker automation, or any new tools which we are finding it interesting, or any new option style or option trading, option methodologies we are finding it interesting, or any core principles which we are finding it interesting. Maybe it could be some other from YCOP, or it may be from price action studies, or it may be from anything, not only from market profile or order flow. It can be any strategies which we are thinking that there is a reasonable edge in the markets. We might be talking about it. It may range from our proprietary trading studies, or the one which is available, which is brand new, which very few people focus on such kind of edge, right? So that community access webinars will be available to all the Converge 2019 attendees. And there is also a private trading community access we are providing to all the participants. And that is a market call Slack support, right? So it's our tool. If you would have been seen, if you haven't seen market calls 2019, I'm sorry, if you haven't seen market calls Slack, so here is our private trading community, where day in, day out we'll be talking about markets, right? So where we'll be talking about day in, day out about markets, and we will be talking a lot about market profile, and we'll be talking about the concepts like market profile, order flow, and most likely there are topics. What we'll be talking about here is that so day in, day out about how the market is fluctuating, and where the buyers are entering, where the sellers are entering, which level one have to monitor, why they have to monitor. When that level is getting broken, what does it mean? When the buyers are taking control, how the sellers will take control, why the market will move to a particular direction, or whether the market is topping out, or whether the market is bottoming out. So there are multiple discussions which will be happening during live markets, right? So during live markets, it's more of a community. People can come and ask questions, and during live markets, we'll be keep on sharing our views. Every now and then, we'll be keep on sharing our views. And it absolutely an zero nonsense platform. No fun here, no politics here, right? And no jokes here. It's a pure market learning platform, especially for the market profile players and order flow players, and the one who love to do automation in AMI Broker. Right, so we have multiple channels over here. It's a highly organized channel, and basically people don't mix up things with each other. So people who trade a market profile, they'll trade. They post only market profile information. They trade only order flow information. They trade only order flow information. And this particular community, it's so far closely 663 members are there, and all are the trained students by me. And a lot of interactions happens and a lot of learning happens, and there is zero takeaway of unwanted stuff here, right? So it's pure educational platform, and we'll be talking about every now and then why this fall is happening. So I'm going to explain in the last part of the section. I'm going to explain how did I anticipated that this market is going to go down, right? So I'm going to take the history of last Friday's activity. So what we discussed and what does it mean, and what you can understand from the Friday's price action. That's what I'm going to explain here. So these are the discussions which happened on 9:25 the discussion started, right? So anyways, let me, this is 30th. The event is supposed to be on 31st, right? So 31st. Yes. Okay. So let me explain what I am going to discuss in Converge 2019. So when it comes to order flow, I'm going to talk about wide variety of topics, including trading strategies, right? And what I'm going to explain from the order flow analytics is that how we can use market order flow analytics to visualize the market orders, like what is market order, and how one can use the indicators, how one can understand the order flow indicator, and what are the observations a trader has to make, and how one can use to understand the market orders, right? And how one can understand, how one can visualize momentum orders using order flow, or how the momentum exhaustion happens, or how the stop hunting happens, and how the big orders happens. What are the things you can understand from the big orders? And especially when you are talking about the market orders, how the visualization of the market orders happens, we are going to talk about how the interaction between the buyers and sellers happens in the markets, right? So what kind of interaction happens, whether high or low interaction happens, how what does that means? What does that mean when I say that high interaction is happening or low interaction is happening, or how aggressive the orders are flowing into the markets, right? Whether an initiative response is happening or responsive auctions are happening. What does an initiative auction mean? What does a responsive auction mean? And how is the liquidity flow for the day? Whether it is high liquidity, high velocity, or low liquidity, low velocity. What does that mean? What is the difference between absorption markets or consolidated markets? And how one can understand what is the stacked momentum, right? Stacked momentum, especially if you are a breakout trader, right? How you can understand, while looking into the order flow, how we can understand what is a stack momentum, what does that means, which stack momentum to watch, where to watch the stack momentum, right? And what does a high liquidity, high volatility means to markets, and how the smart money positions and how the smart money unwinding happens in the market, especially the big players. When I say smart money positioning or smart money unwinding, I mostly refer to big players who have an who trade more than 1,000 lots or 1,500 lots in Nifty or Bank Nifty, how they come and position in the markets, or how they unwind in the markets, how you can able to spot from the order flow. And so a couple of responsive breakout strategies, we'll be talking about it. And when it comes to momentum exhaustion, we'll be talking about one of the very interesting concept, the trapped buyers or trap sellers, and very oftenly which we use it for scalping purpose. So we use this for scalping purpose, and we use responsive breakout for scalping, we use stack momentum for scalping, and how one can predict and delta based exhaustion, right? So there are proprietary trade setups there in the form of an R delta, and how one can understand this R delta, and how one can do, or how people are already big fans of R delta, right? So already we have enough fans for R delta here, and especially there are a couple of Twitter fans who frequently post R delta signals whenever it's happening. It's kind of a trend exhaustion. It predicts the short term, very short term momentum exhaustion, and what are the rules you have to follow, and how you can combine with the tools like Bell Trend Analyzer. So Bell Trend Analyzer is one more tool to remove the noise whenever you're using the R delta signals, right? Bell Trend Analyzer. This is what I'm going to talk about over here. And high volatile exhaustion bars, how an high volatile exhaustion bars happens in the markets, and what does a delta divergence means? What does a delta divergence means, right? And when it comes to stop hunting, what are the places one can expect stop hunting, where people keep their stop loss, or what are the places, psychological references, people tend to keep a stop loss, and how one can anticipate a stop hunting using order flow, or plus one can use market profile kind of concepts, kind of market profile kind of concepts to use and combine with order flow, and to take judgmental decisions on whether the stop hunting will happen today or not. What are the odds that today stop hunting will happen? What are the odds that there will be a late drop? What are the odds that the day high will be tested, or a day low will be tested, or whether the day high is secured or unsecured, right? So those kinds of strategies we will be talking over here. And especially when it comes to big orders, we'll be talking about institutional execution strategies, like it can be like VWAP execution strategies, VWAP or TWAP, how the institution execute their strategies, right? Especially when big orders are coming into the markets, how they used to fill up something like an iceberg algorithm, or a liquidity seeker algorithm. Liquidity seeker. There are a wide variety of institutional orders out there. I want to talk about a couple of institutional execution methodologies and how you can spot from order flow, right? And apart from that, apart from the order flow analytics, I'm also going to talk about the basic foundational principles of how to understand the order flow, right? So right from the scratch, I'm going to talk about the foundational principles and how one can use order flow. How one can use order flow to understand whether the order flow, whatever it is presented over here, it's showing a strong auction or a weaker auction. Just give me a second. Yeah, it's jumping up. Just give me a second. Just skipping up. Yeah, I'm sorry. Oh, wow, it's jumping. Okay, so when it comes to the foundational principles, I'm going to bring up some couple of foundational principles to understand the order flow much better than anybody else. So I'm going to explain which auction is stronger, which auction is weaker, and how you can spot in any markets, in any trading conditions, how you can use this information to understand what is happening inside the markets, and how you can understand the market depth, or we can also call that again the order book analytics or order book dynamics. So here I'll be explaining how the order book functions. Order book. It's more about order book dynamics. And what are the available data types, right? And how Indian markets, what kind of data types applies, and what does it mean for an order flow, and what you can understand from those tick data points, how the order flow is constructed based upon the available tick data, right? And what kind of quality when it comes to the institutional international standard, and what are the available different data types, L1 data, level 2 data, level 3 data, tick by tick data. So those kinds of data types we'll be discussing over there. And how the liquidity flow in the markets. So what is liquidity? What is liquidity and how it is different from volume? And what is volatility? What does it mean for an order flow trader? And a couple of order flow principles. I'm going to bring up some 8 order flow principles there. 8 volume profile principles. 8 volume profile principles. Okay, so 8 volume profile principles. I'm going to bring it over there, and how you can use those principles and how you can mix with order flow to spot rejections, to spot setups, to spot momentum, and how you can understand the volume flow and try to understand what kind of players we are dealing with. Am I dealing with intraday player by looking into the volume flow, or am I dealing with some sort of an institution, or some other big traders, or what kind of traders we are addressing for the day using the volume flow, and how to measure the volume flow for the day, especially from an intraday perspective, from a scalping perspective. Understanding the volume flow, it provides more and more added advantage for an order flow trader. Right? And how the stop hunting mechanism happens, and what are the places we can anticipate a stop hunting, where the momentum exhaustion happens, or what are the exhaustion principles, where you can spot an exhaustion, where you can spot a momentum, what are the different setups. And next comes the most important topics, the absorption initiative, how the auctions happen, how the slow auction happens, how the fast auction happens, how the initiative drive happens, or how the absorption happens in the markets, right? I'm going to talk each and every principles one by one, and I'm going to help you to understand how we can construct trading strategies on top of these foundational principles. Yeah, I'm going to come up with objective trading setups, closely 15 trading setup, 15 to 16 trading setups I'm going to talk about it here, the trading strategies. So some of them are trending strategies, some of them are mean reversion strategies. But from a trending strategies perspective, we're going to talk about responsive breakout strategies and stacked momentum strategies, delta unwinding, delta absorption, delta breakout setups, zero momentum setups. So these are a couple of setups which comes under the category of trending. All these are, some of them are scalping setups and some of them are intraday trading setups. So basically, market will keep on doing one setup, one or 3 or 4 setups in a day. And it out of these principles, almost most of the trading strategies comes under these principles, the entire principles. And all these are very objective trading decisions with a very tight stops. I'm going to help you out how to keep a very tight stop loss, something like an Nifty, how to keep a 7-point stops or 10-point stops. And I'm going to explain using these strategies in Converge 2019 about how you can take these strategies very confidently, and how to understand the, before to that, to have a greater belief, how you can understand these foundational principles, and on top of these foundational principles, how we are going to build these strategies on top of this. It is a very tight risk, how long to wait, and what are the subtle information you have to wait. Especially some of the popular trade setups in our group are exhaustion setups, our delta strategy, trap buyer, trap seller strategy, momentum reversal, momentum auction reversal, or a combination of exhaustion reversal and delta divergence, failed breakout setups, and recently I added COT based failed strategies, unfinished auctions, even trade setups. Almost most of the setups, all these are very popularly traded setups on day-to-day basis. Right, I've been an aggressive trader these days on these setups, and the last Friday we had a setup which is based upon it's a responsive breakout strategy, it's a delta unwinding, and so these are the 2 strategies which we observed last on a last Friday trading. And I'm going to explain about that, how I seen the order flow based upon these absorption and based upon the delta unwinding, how the delta unwinding happens on last Friday. And it is also a combination of a stacked momentum, failed stacked momentum strategy, right? So it's a combination of 3 information, and based upon this 3 information, I'm going to explain how the activity happened. in fact, it also explains the delta absorption as well. So what I'm going to explain is a combination of a 4 strategy which happened on last Friday. So out of this, all these principles, some strategy will be keep on happening every now and then. And the goal is to how to observe this order flow on a day-to-day basis, and how one can read it perfectly so that they can take a profitable advantage or a very tight risk advantage in their intraday scalping, or positioning themselves from an very short-term trade setups, right? So let's quickly go back to the last Friday's activity. How many of you are very new to market order flow or market profile kind of concepts here? Okay, Manoj and a couple of people are pretty new to order flow. Okay, maybe if you haven't seen the order flow charts for the very first time, let me show you the order flow charts here. Okay, some people are still learning and a couple of people are new. So a lot of people are new, right? So, okay, great. So if you haven't seen the order flow for the very first time, and let me show you here. So this is the order flow charts, and of course I have to connect to the data. And the data which I'm going to use today is from eSignal. So let me connect to the eSignal data. Yes, the data loading might take a little bit of time because order flow involves a little bit of slightly a bigger calculations. Yeah, there we go. So I'm using Nifty June series on a 5-minute time frame. If you understand what happened on last Friday there was a massive drop around 12 o'clock. So 12 o'clock there was a massive drop, right? It was a big drop, and I want to explain what happened and what made the crash and what are the clues we got from that crash. It is not a day-to-day activity, but when it is happening as a trader, you have to be watching it, and I'm going to explain how you have to watch that particular. I'm going to explain how I watched on last Friday, right? And how I taken a decision that maybe something is going to happen, right? So let me explain here. In order to do that, I have to go to the indicator setup, and I'm going to put the TPO size, the brick size, the each and every brick size over here. I'm going to change it to 1 rupee. So that is a software setting. If I made it as 20, then it says like it's a 20 will be multiplied with a tick size 0.05 and it becomes 1 rupee. So each and every block will be 1 rupee. And I had divided by volume by number of shares. And if you understand order flow is more of a study about volume, how the volume happens, and more than volumes, how the market orders are getting interacted, how the buy market orders and how sell market orders are interacting with each other. I mean, how the market orders and how the market buy orders and how the market sell orders are flowing into the markets, how the buyers and sellers are interaction is happening at each and every price levels, and are where the big orders are coming in, where the momentum is coming in. I would say that it's a radical study, and its order flow is not new. It's there right from 2002 onwards, but in a different form. But proprietary tools are more sophisticated softwares. They started rising from 2008 onwards, but 2012, many order flow tools went mainstream, and it got quite popular in popular across the globe, and especially most of the full-time traders and most of the sophisticated institutional traders as well, they these days use order flow as a principles, and they use as their some order flow traders even they do for their bread and butter here. And so let's get back to the tool. So it's a study. Order flow is more of a study. It talks about how the buyers and sellers interact at each and every price level. Right. So let me start. Let me start explaining what happened on last Friday. So better I would say that let me, instead of me saying, let me run a simulation here of last Friday's activity. So I'm going to do what I'm going to do here is that I'm going to disconnect the feed and I'm going to use playback connection. So playback connection is a feature in NinjaTrader 8 where you can do simulation. In NinjaTrader 7 it is not possible, but NinjaTrader 8 one can run a simulation here, and because it stores that data and it does a historical replay. That feature is not there in NinjaTrader 7. The same feature is available in NinjaTrader 8. Just give me a minute. Yeah, so I'm going to simulate on 31st March, 31st May. So let me explain on what happened on 31st May, right? So on 31st May, price had broken a 3-day high. So if you see from the market profile, you would have seen that. So this is each and every days of activity, each and every days of activity here. So this is 28th May's activity, 29th May's of market profile activity, 30th activity. So here is a 3-day high. So that particular day I was watching for some sort of a momentum exhaustion. So price took out 3-day high. So what the price had done, price took out a 3-day high. So we are watching it patiently there. 3-day high, right? So 3-day high. So think about it. Price is trading 3-day high and it has been broken out. That means the participants of buyer confidence will be very good there. So buyer's confidence is really good, and you see that price took 12,014 at the opening itself. They took it and they took a drive. It is almost 50-point movement in the first 15 minutes itself. Within 15 minutes, we got a 50 points price action movement, just like that. Just like that, there was a 50 points price action. Right now, let me run it, okay? Let me run it and let me go to order flow. So in the order flow, on a 5-minute time frame chart, you'll be able to see how the buyers and sellers are interacting. On the left-hand side, you'll be seeing the one who is punching the market buy orders, and the right-hand side, you'll be seeing the market sell orders. It is like a 5-minute candle. Inside the candle, you can see how the buyers are interacting and how the sellers are interacting and how they are interacting at each and every price levels. And now you can see here somebody is punching an market buy order. You can see that 145 quantities of buy market order has been placed, and somebody placed market order at 114, 17 market orders traded over here, 37 lots got traded over here. You can see that sellers are pushing the price up 147, 112. So within this candle, you'll be able to see the buyers here. This is buyers and this is the sellers. So buyers are pushing the price up. The one who punches the market order, they push the price up. And now you see that the sellers are entering into the market. You can clearly visually see that how many lots are entered by the sellers. But if you just look into the candlestick, you don't have any idea what the buyers and sellers are doing. But if you look into the order flow, you'll be able to see, you'll be able to bifurcate how much effort is being made by the buyers. So now we can say that 100 lots has been made to move the price from here to here, right? It took 100 lots. So there are times, so by reading this market profile pattern, And now you can see here the way they are positioning. Probably you see at these levels how the buyers and sellers are interacting. You see this level, this band, how the buyers and sellers are interacting. The interaction is very big. So 374 sellers, 610 buyers, 468 lots. It's not volume, it is lots in terms of lots. So 206 sellers, right? 242, 430, 206, 420, 475, 201. So this is how some smart money might be positioning themselves. We don't know which side they are going to position, but whenever you are seeing such a kind of a bigger quantity, that something is getting absorbed, right? So the entire buying activity is getting absorbed over there. So this is what we call it as an absorption, where a strong buying activity is getting absorbed by the sellers, especially on this big candle. So first of all, if you understand what is happening over here, the absorption is happening at the edges. Absorptions are happening at the edges. So the entire buying activity is absorbed at the top. So once you're seeing the absorption, now if you keep on going on seeing this trading, so let me run this strategy by 10x. At least we get some momentum here. So maybe I want to run at 30x speed. So every second in the markets, 30 seconds of market activity is going to cross by. Now you can see that sellers are pushing the price down. So sellers started pushing the price down. Not much of a seller, but see that not much of a seller. The interaction is very less. The interaction here is very less. The interaction here is very less. But the interaction is more. Where the interaction is more, the interaction is more in this location. In these locations, the interactions are more. And especially these locations, the interactions are more. The interaction between the buyers and sellers. That is what we call as an absorption. So now, see what is happening there. Okay, now again on the downside also the selling activity is getting absorbed. You see the interaction here, the volume is absorbed here. So absorption is seen here, absorption is seen here, absorption is seen in this band. So market has started trading in a kind of a range. It started trading in a range. You see that market is going in a range, but I'm seeing absorption on both sides. Buyer side absorption is seen at the top, and any selling activity, sell side absorption is seen at the bottom. And again, price is coming to the range here, upper range here, and I'll be seeing one form of an absorption again. So just have a look around how the activity is happening. So these are the way the institutions might be accumulating or distributing. Again, see the interactions are very low at this point of time. Still the candle is not ended, but around 10 o'clock. Look at the volume figures. The volume figures are just 800 lots got traded here. At the end, the bottom end, you can see the volumes, how many lots got traded at each and every candle. Right? So the each and every candle, the volumes, you can see it in this band. Volumes are, I would say, that pretty decent till 10 o'clock. And after 10 o'clock, the volume started drying it up. But every time the price is reaching the upper band, the interaction gets higher. The interaction gets higher. The interaction gets higher. But interaction gets higher at the lower edge also. And this is what significantly observed. And we had seen a range of trading activity, kind of a range of zone where the absorption happened. So this entire band, the absorption happened. So we thought like break of this band, if more and more absorption is going to happen. So you see that again, the interaction happens over here. This band is also one form of a absorption again. So more and more absorption started happening at the edges. And which is not a good indication. And lack of continuation is going to be a dangerous sign that market could move to the next band of zones. So we are also looking into parallelly. We are also looking into one of the stacked momentum setups where the momentum players, they position themselves somewhere around 12,013, right? So 12,013, somewhere in this band. It's tough to say where over here, somewhere around. So let me pass over here. You can see here is a low. This is a band I'm talking about it. So this is a band. Price is completely trading in this band, and every time price is reaching the upper end, there was an absorption. Every time the price is lower end, there was again an absorption. So absorption was happening in a band, right? It is not just an low volume activity, but big volume activity is happening on the balance of the edges. The top of the edge also bigger volume activity. The bottom of the edge also a good decent volume activity happened. So let me put a box here saying that it is an absorption. So this is a place where initially we had seen absorption. So I said like it is getting weaker and weaker. Maybe the sellers are likely to take control. So that was my comment in the Slack. So if you go to the Slack, let me show you what was my comment in the early morning. So 12:10, 12:30, this is where we had figured out a support zone. I said like any break below this level could bring about look above the balance and fail in dynamic profile, and it serves as an immediate support zone. If that support zone is a crucial support zone, if this is going to break, right? So I said that it's a stack momentum buyer support zone. If this stack momentum buyers are going to break, it is going to be a serious downtrend. That's what I said about it, that level was around 12,010, 12,015. And we also anticipated the break, right? It's not only we said that this is a support, we anticipated that that support will break. That is a support. And so that support is coming around 925 candle, right? 925 candle. So if I try to draw a support in this band, so the same support band I'm going to draw over here, 12,012 to 12,015. The same support level, let me bring it over here. So I'll also draw a support band. Between 12,015 to 12,012. Okay. So now let's observe the same support band. How now see the activity, how the activity is happening over here. So let me run the auction again. So it's running at a 30x speed. Now we see that there was just a mild break, mild 1 point break down below this balance. From this entire consolidation, it just broken by a couple of ticks, and then it's still not giving up. So price started. We said like maybe they might be trading in a support zone. The interested parties are here in this band. The interested parties are in this band. So they might give support for some time. They might give support for some time. That was my comment. And what we are observing is that one more absorption we can anticipate over here. The one who aggressively drive from that place, they might be coming and do some sort of a passive support in the form of an absorption. Every time price comes into this band, you can expect some absorption, right? So you see that absorption is happening. Somebody is coming and the entire selling activity, entire selling activity is being absorbed by the buyers here. So the buyers are passively absorbing in the form of a limit orders. And again, bounce back happened. But see the interaction now. The interaction is getting weaker and weaker. The interaction is not the same interaction. The interaction between the buyers and sellers are getting weakened. These are the clues. Again, you see that price comes to the same band and bounce back happened. It not only happened once, I think it happened 2 times or 3 or 4 times. So this is a band we watched out for the support. My concern is that it's immediate scalping long. So whenever such levels are getting tested, it's an immediate scalping long. Probably you can expect some 10-15 points, and you should be out of the game, right? And if it is getting stronger, but the interaction is weaker, so in such a case, you have to be a very quick trader. If you're scalping, you should be scalping for 10-15 points, and you should be out of the game. Every time price enters into this band, and you see an absorption, and we see that price is coming very close to that range. Again, there was an absorption. So the entire selling activity is getting absorbed. The entire selling activity is getting absorbed. I said like, but the interaction is weaker. The interaction is stronger. It's not a stronger interaction. The interaction at each and every price level here, each and every price level here, each and every price level here. It's a weaker one. It's a weaker one. I said that they are observing, they are coming and supporting. The buyers are coming and supporting, but there are fair chance that they are going to get a break. They're going to get a break because the interaction is getting weaker and weaker. And you see that every time the price comes and touches that support band, it's coming and taking a support, and the price is also shooting up. But this is going on for almost 40 minutes, 40 minutes. This activity is happening on. Every time price bounce back, the interested parties, the smart money is coming and supporting it. The interested, this has not happened once. You see that how many times? 1, 2, 3, 4, 5 times the support happens. Every time it will bounce back, it gives a simple scalping opportunity to trade the long, right? And now we see that now how the price is coming around 11:45 or so, right? So far the absorption happened. So absorption has been the buyers uh, who already taken around this level. They are now putting buy limit orders to support this fall, support this fall, support this fall, and now they are supporting this fall. So every time they supported, but the interaction is weaker. That means there is no greater strength in these markets. There is no greater strength in these markets. Probably liquidity is running dry, and the odds of breaking increases. The odds of breaking increases because now the liquidity is running dry, and I can say from the interaction itself, we can say like the liquidity is completely running dry, and most probably they can get one more hit. If that hit is gonna be not a stronger one, right? If that hit is not gonna be a stronger one, I'm able to figure out that from the market profile. If you look at the market profile, I can sense that the letter C period, it comes exactly and rest on the 3-day high. I said that's a weaker reference. You can expect one more test towards those levels. So one more test towards those levels. How they are testing, how they are breaking, it matters a lot. So you see how they're coming and breaking this time. So they come and break, and you can see the way they are coming and breaking, and how much volume they are triggering. You see so far the volumes are running very low here. So think about the volumes here. The volumes are very less, 792, 812, 823, right? So all these are low volumes. All these are low volumes, low interactions. That means low liquidity, right? So not much of greater transactions are happening, right? So the volumes are getting dry and dry and dry. At the same time, a lot of consolidation activity is happening instead of an complete trend reversal, right? So instead of that, yeah, I would say that it's more of an slow rotating markets are happening, but anytime this band can break. That was my comment. So if you go back and check the comments here, when I posted. So my comment around 11 o'clock, right? So 11 o'clock was around. Okay, so possibly buy side liquidity is drying up. This is around 10:28. Sellers might take active control, and it is no way connected to the market profile, right? So somebody was asking, is this an possible initiative drive? That means, are you expecting a big gap down? Right? Are you expecting a downfall from here? Right? And I said that buy side liquidity is drying up. So far buyers showed up. So far buyers showed up, and so price trading around the support band, failure to hold the support band is the key for the sell-off. So we are seeing some sort of an absorption and kind of a delta divergence, and possibly my anticipation is here is that possible initiative drive, probably a drive, a breakdown through the support zone, and break this level. And when that level is going to broken, it brings an serious sharp fall in the markets. I don't know what is the quantum of the fall, but I can say that there is a quantum of fall is most likely to come based upon this setup. So now these are part of the Orderflow trading principles. And I'll be teaching in Converge how to look into this factor. And each and every tiny examples we'll be looking into it. And so this is around 10:49. So 10:49. My comment here was, where's 10:49? So here is 10:49. So 10:49. 10:49. We are in a live session on last Friday, and I was doing a live session to my clients on Orderflow crash course. So where we are trying to explain what is happening there, and so I was saying that weaker interactions thus far and some absorption at this band. One more time, if the price comes to this level, but till that time it was supporting that band. Till that time, price comes to the band and it is jumping up. This was happening till 10:49. I said that weaker interactions are there. The buyers and sellers interaction is not good. So liquidity is flow from the buy side is not good. And so if one more time, if the price comes and break the support band, lack of absorption is there. That means if the buyers are not coming and supporting the fall, then it is a weak trading activity. Probably it's one way where you can expect a greater fall. We can that's what we call as an initiative drive, a sharp downside price action movement you can expect. That was my that was my comment on that day. So around 10:54, again that was again and again the price was coming and testing this band. So this is around 10:54. So lack of absorption at this level is a sign of more weakness. One more time, from a scalping perspective, it's a weakness, and the odds of turning into initiative down drive increases. So that was my comment there. And let me go to the. So I think around that this was happening till 11:45 or so. So my comment is that a lot of stories from today's order flow. Price so far defending those stacked momentum buyer zone. Twice absorption seen at those levels. Failure to hold is the key to the more weakness. This is around 11:46. Right? Step-by-step analysis always. Right? A step-by-step analysis, always an objective analysis, which will help you to know what is happening. And this is what it happened around right. So that this is around what is the time here? 11:47. So 11:47. The break came. So this is some more. Just give me a second. Yeah, 11:47. You see that how the break came, and I'll try to explain how the break came. Let me show you in the live markets. Like this time, there is no absorption. There is no filling at those levels. The smart money is not coming and supporting. Instead, they unwinded their positions. So it's been around 11:45 is what the 11:47 is the break came exactly. Hardly another 5 minutes from here. So time is 11:40. So 41 now. You see how the price is coming and breaking. Let me expand this stacked momentum activity. Did we anticipate a test? Yes, we anticipated the test. We anticipate the break also. So you see that just like that, there's no reloading at all. They straight away they are breaking it. They're breaking it down. They're broken down. You see that how fast they've broken down. You see how the sellers are all in a sudden just like that they're entering, right? And you see the delta candle. The delta is the one which says that how bigger the sellers are, right? How aggressive the sellers are. So big delta candle is negative. That means big sellers are entering into the markets, and the aggressiveness is quite sharp. And especially when such kind of a key support levels which we are monitoring is that broken. That when the moment immediately it got broken, that is an immediate trading opportunity. And especially all the other contexts are saying that it should be immediate drop, and the moment it drop, you have to be stepping into that trade, right? So that is where you can anticipate a breakout trade, and the breakout trades are most of the time it ends up in a powerful trade setups, typically with a low risk. Probably at this point of time, 12,020 is where one can keep a stops, and they can immediately go and short this markets. because you see the activity here, two lots, all these are single lots over there. Single lots got traded over here. Those are the signs of weakness from the buyers. Couple of weakness, you can figure it out from the buyers. It's an immediate intraday trading odds to trade this downside movement, and see the volume figures as well simultaneously. Look at the volume figures, right? So 4,000 lots, 4,000 lots. This is how the smart money is not buying. They are the first one to unwind this position. The entire smart money has been completely offloaded, and by around 12 o'clock, the drop came a bit faster, right? So you see the quantum of the drop. The quantum of the drop was very heavy. In fact, you see the zeros, a lot of zeros there. So it means we are traveling in a very liquid zone, illiquid zones. Just like that, the fall is happening over here. Let's see how the orders are getting filled up. Right? Not many places the trade happened. There are zeros over here, a lot of zeros over here. So a lot of zeros over here. And that's a quick pullback as well. It's an immediate 100 points drop. Almost it's a more than 100-point drop. It's happened in a matter of 5 minutes. And then it got a pullback of 100 points as well, back in the same candle. Right? So if you look into the delta is big negative, and almost 23,000 lots got traded on that big lot itself. Right? So that means the people who are already went long, they are the ones who are covering. When more and more people started covering, that is where you will be seeing such kind of panic drops, right? And then market started moving in a sideways fashion. Rest of the day, nothing much happened later on, right? But this is one good scalping trade a trader would have been taken there. And this is not a very commonly repeated pattern, but once in a month or so you might find these kinds of patterns. But when you are finding these kinds of patterns, when you're able to recognize the absorption, when you're able to recognize that smart money is unwinding the position, it's tough to stay against the smart money. When smart money itself, they are moving away from the markets, you should also move away from the market, or you should go and tag along with them, along with the strong hands, right? Because the strong hands itself, they are closing their positions. How do I know that they're closing the position? Because that's how the liquidation works in the markets. That is where you'll be seeing the faster crashes in the market. Most of the faster market crashes are typically unwinding of old business. Probably they might be having old longs, they might be booking profits, or there is a fear of booking profits because maybe the other institutions, more and more institutions might come and book the profits. So when more and more institutions are trying to book the profits, that is where the institutional crash happens. That is where the liquidity crisis happens. And luckily, that particular day, there was just an 120-point liquidity crash. And you know that how the majority of the liquidity crash ends up. If there is any panic there in the markets, any news-based panic, something like a Lehman crisis, right? So we very many times in 2008, we had seen such kind of a liquidity crashes, liquidity crunch during the markets. The supply of the limit orders gets stopped, and all in a sudden sellers pushing the market down. So this is how the crash looks like. The liquidity crash. I would say that this is a mini liquidity crisis. It's just 100 points drop. So we can tag this as a mini liquidity crisis. Only that liquidity crisis luckily existed only for a very short period of time. If there is any strong news would have been occurred on that particular day, I would have said that it would have been a very, very bigger drop. Right? We don't know how much deeper that drop would have been gone. It might gone as deep as possible. But this is a very mini liquidity crisis. So these are the places the option writers, right? They get panicked themselves, and then they close their position with the deeper losses. And once in a while it happens. It doesn't occur very periodically. Probably these kinds of liquidity crashes occurs once in a year or once every 6 months. But these kind of crunches are not very common on day-to-day basis. But if you understand the context, you don't need to predict that there is a liquidity crisis might happen, but you know that some deeper cuts might be happening based upon what the market had done in the morning and how it had done in the morning. And that's what we predicted, and we anticipated that this downswing might happen, but at the same time, we had taken a positional bearish view as well. And so far, we are carry forwarding that positional view. But at the same time, on that particular day, on that particular day, the downside liquidity crisis was so deep, right? Lucky those option sellers, the markets, that many liquidity crisis just stopped, and then they got saved themselves, right? So otherwise, it could be an suicidal moment for them. So coming back to the topic, and I guess in the rest of the time, nothing much has been happening. It's just more of a sideways activity. But you see the interactions here on this crash. By studying the crash by interaction at each and every price level, you're going to see lot many understanding about over here. See, there's a lot of zero zones here. All these zones are where lack of liquidity. So, and then liquidity comes, and again lack of liquidity. There was a steep crash coming in. So many places you're going to see this kind of zero zones. Just like that price just skipped, just straight away it skipped, and you can see such kind of zero zones, many zero zones in this band, many zero zones in this band. So those are the signs that markets are traveling in a low liquidity band, and faster it's going to travel, faster the crashes is going to be. The velocity of the markets, the acceleration is going to be faster, especially when the price is moving in a low liquid zones. So I'm going to talk about these strategies, right? So out of this, we've seen a couple of strategies today. So more in-depth discussion than this. Of course, time is very limited for the day. It's very difficult to explain everything in one shot. But I'm going to explain inch by inch in the community webinars, in the Converge webinars, and pre-webinars, post-webinars. So we're going to take one by one strategies, and I'm going to explain how you have to monitor, how you have to observe, what you have to observe, why you're observing, how your focus should be, which are the small opportunities, which are big opportunities, right? And how to place your stops, especially how to place a time-based stops, how to place a price-based stops. I'm going to explain there. And we're going to start everything right from the scratch. And we're going to see the foundational principles of order flow, and we're going to get a complete perspective of the order flow. And the motive is to make yourself comfortable and make yourself independent on the order flow analytics front, and make you to explore new strategies, newer edge in the markets. Any questions you can ask me right now, anything about Converge or anything about what I am going to explain in Converge 2019, or any questions on pricing, or any questions on the market activity which happened on last Friday. Any questions you can ask me. There is a question section there. You can post your questions only. Please post questions only in the question and answer section. Any questions? Yeah, couple of questions here. Is still single occupancy available still now? Yes, single occupancy is available. I think you have to talk to the Converge team, and probably you can talk about. So if you go to Converge webinar, right? So convergemeet.com, and everyone will be part of this Slack community who are attending the Converge conference. Even last 2018 conference who are attended, they are also part of Converge conference now, and whomever going to attend 2019 also will get access to the Converge the Slack community conference. So you can always go to convergemeet.com, and you can get the complete details about the single occupancy or double occupancy over there. So there is a question, what is a prerequisite for attending the webinar, knowledge base wise? Then I would say that if from a beginner level perspective, right? Little bit of understanding about how the market orders and limit orders functions, and basic understanding about how the trading happens in the markets. I would say that the basic foundational understanding or basic technical analysis should be a primer here. If you have that knowledge, then we can start. We're going to start everything right from the scratch. Right? When we are not going to um, we are not going to leave anyone saying that we are going to start only with advanced concept. No, it is not for the players who are coming for an advanced concept. It's for the people who want to learn from the basics and they who want to move to the advanced level concepts. So we are going to talk everything here, everything from the scratch to the advanced level concept, but always we are going to start from the scratch. So what about Monday's markets? So talking about from the order flow perspective, we don't care, right? So we don't care what the Monday is going to do. Whatever the market is going to do, as an intraday trader or a scalper, most of our decisions are live, so we don't do any postmortem, and especially when taking live trading decisions, right? So most of the trading decisions are taken live. So mostly we give more importance to the now information than what happened in the past. So past is past. Order flow doesn't care about what happened in the past. Order flow mostly cares about what is happening today, or max to max how the auction happened yesterday, right? That's what we care about it. We don't care about 2 weeks back what the order flow done, or 1 year back what the order flow done. We don't even care about that. We always focus on the now information and more priority, especially from the market profile perspective or order flow perspective. We know we have a memory of what the market had done yesterday or what the market had done in the last 1 week. But when it comes to the live markets, live decisions, we provide more importance to, I mean, we give more importance to what is happening right now. So Monday markets, only when the market opens, then only we can say what the market might do from an intraday trading perspective. Is it an intraday opportunity? Is it a scalping opportunity? So market has to generate some information, right? Without generating the information just like that, we cannot go from an we cannot go and predict. We cannot use order flow to predict what will happen tomorrow. But when the market is opened, when certain informations are presented, based upon the information, we can take an objective decisions, saying that hey, possibly this is where the breakout is going to happen. The market is preparing for the breakout. The market is preparing for the breakdown. So this is where you have to enter with the low risk. This is where you have to enter with the high probability trade setups. Right, so that is how one can anticipate the price action movement, especially from an intraday standpoint. Do I have any expectations on Monday? I don't have any expectations on the Monday. Let the market open, and then we'll come and trade that Monday price action. Right? Yeah. So I guess that has been answered. How to differentiate continuation crash from retracement? This is a question from Manoj. I don't know what you are exactly talking about. I'm sorry. If you could brief it, I can try to explain. Maybe let me try to take the next question. Difference between market profile and volume profile. So market profile is more of a price-based study. It talks about price distribution, whereas a volume profile talks about volume distribution. Right? Market profile is price distribution and volume profile is volume distribution. As simple as that. But most of the software tools, especially the Bell TPO tools or whatever tools which you are finding around the internet, most of the market profile tools also have volume profile side by side. Right? So price distribution is nothing but the market profile and volume profile is the volume distribution. So mostly we'll be going to see side by side in most of those tools. Which period is important in market profile, right? So I would say that the market profile, when you're talking about period, right? We use the standard setup. It uses 30-minute period. But market profile is completely independent of time frame, and each and every letter we'll be using the default the same 30-minute setup only. So was that sharp down move due to down move in S Bank? Yeah, could be. One is the HDFC Bank sharp downfall that made a break in Bank Nifty as well as in Nifty. But at the same time, it also provided pre-informations before the down move is going to happen. Market showed weakness. So what was the weakness is that? The other weakness what we discussed in the Slack forum is that when the price broken 3-day high, right? So that is a good market. It showed the initially buyer showed confidence, but later on the volume started drying up above the 3-day high. So especially what, when the multi-day high is broken and volume is drying it out, that is the one sign of a lack of interest from the market participant. That is one clue. And on top of that, if you compare with the order flow, the context is saying that there is a possible transition from buyer side control to the possibly the control from the buyers are slowly fading out by looking into the interaction, and now completely when a certain level we are monitor, that level is going to broken, it could drive more sellers in a complete force that might bring more liquidation in the markets. So that is why we are able to combine volume profile as well on that particular day. Volume profile, we used to predict that the Bank Nifty will test so and so levels, right? So we used volume profile, we used market profile, and we used order flow to take a combined decisions. So it is a day is enough to cover almost enough. Yeah, definitely a day is not going to be enough. That is why this conference we are doing pre-sessions, post-session follow-up, and on top of that we are doing community webinars. On a day session, I will be able to cover the maximum basic information and most of the trading strategies. Almost all the trading strategies I'll be able to cover. But in depth, we will be talking. The pre-sessions will be covering the basics in depth. Post sessions will be covering the advanced stuff in depth. But during the 1-day session on order flow, it's a complete 1-day session, right? At times, the session might go until 9 o'clock or 10 o'clock in the midnight. So it starts at 9 o'clock, and the sessions might keep on running till 10 o'clock. At times, maybe last time one of the session which I done 6 o'clock in the morning. Right, 6 o'clock to 9 o'clock I started, and then again from 9 o'clock to again 6 o'clock. So it's basically 6 o'clock to 6 o'clock session, complete 12-hour session. Last time we done on market profile. So hope this time also we'll be doing in some sort of an extended session to cover the maximum at an at a very reasonable speed, right? At a very reasonable speed, I'll try to explain and I'll try to give inch by inch information about that smaller nuances. Very good question from Nitin. What will be the key takeaway from the seminar? The key takeaway is that you're going to take an advanced weapons like market profile and order flow and neo wave, and more importantly, you are going to get from the quality mentors. Most of them are full-time traders, and almost everyone is a full-time trader here, and everyone is having an tremendous market experience here. Dean is having 16 years of experience, and I myself am having 13 years of market experience, and Jay is having 12 years of market experience. So of course, if you combine closely 35, 40 years of experience, and Ashish Kayal again another 12, 13 years of experience, right? So almost everyone is there in the market for quite some time. We had a very good screen time. Continuously every other day, everyone trades Nifty, Bank Nifty crazily, right? So a lot of key takeaways from there. So the entire 3 days of interaction is all about how to understand the behavior of the buyers and sellers, and how you can apply, how you can go back and apply on any markets or any market conditions, or what are the nuances, what are the small nuances as a trader you have to focus, how you have to focus on your risk, how you have to build your own trading framework as a full-time trader, how you can evolve, right? So how you can, what are the qualities you have to evolve as a full-time trader. So those are the principles we're going to talk about there. Of course, definitely a lot of actionable insights, a lot of trading strategies I myself am going to discuss, and hopefully the same will be discussed by the other mentors as well. Does market profile, volume profile helps in next day analysis? Yes, interesting question. Yes, definitely yes. It helps in the intraday activity also. It helps you to anticipate what could happen next also, right? So there are places where you'll be able to spot high probability trade setups. Not all the time, but most of the time you'll be able to say that what could happen based upon what is happening right now. Based upon what is happening right now, you'll be able to say that is it a good auction, is it a bad auction? If it is a bad auction, then what you can anticipate. If it is a good auction, then what you can anticipate. What are the scenarios you can anticipate based upon that how you can position yourself in the markets. Right, definitely market profile. See, my core principles, talking about my strategies, my core principles are based upon a combination of market profile and dynamic volume profile and order flow. Right, so based upon that, I position myself. Someday I do scalping, someday I do intraday, and some days I'll be keep on carry forwarding a single position for next to 7 days or 30 days even. So it differs. My scalping, my duration of holding period might be differs from a couple of seconds to a couple of minutes to couple of hours to couple of weeks, a couple of weeks, right? So that's what my maximum holding period is. I'm not an investor. I was an investor, and I stopped the investing from 2010 onwards, and then I'm more of a trader these days than an investor, right? Yeah. So which software required during training? Again, we recommend Bell TPO tools. So you can go to belltpotools.com, and you can download and you can get an free trial over there. So belltpo.com, which is a tool which is built on top of Ninja Trader 8. Of course, you need to have a Ninja Trader 8 as well, and you need to have a data feed for if you're trading NSE, then NSE or MCX, then you need to have a data feed from authorized data vendors like Global Data Feeds or eSignal or True Data. So these are the vendors who supports data for Ninja Trader 8 at this moment. I guess you can always go back and check the entire setups. You can go to the download section and you can download the tools from there. Or you can take the trial from this link. Okay. I guess all the installation instructions are there. Or in fact, if you want to, you can also connect with the support team. So which candle is important to predict? So which candle is important to predict? What might happen remaining day in the market profile? So which candle is important to predict, which might happen remaining day in market profile? I don't know. I'm not able to understand this question, so I'm going to skip this. So what is the fees without accommodation requirement? I think you have to talk to the coordinator in that case. If you want to talk about the fees without accommodation, if you're from Bangalore and you don't want to take an accommodation, then you have to check with the coordinator, Converge meet coordinator. And but it is recommended to take the residential package because a lot of interaction happens there, and a lot of interaction happens till at times it might go till midnight also. So even if you are a residential guy or a residential people around Bangalore, it's always go and take an accommodation there, and because if the interaction happens till midnight and you have to come back tomorrow around at times at 6 o'clock, so if that kind of difficulties one is going to face, it's difficult to transit back and forth to the event. Will there be mentoring post seminar also? Yes, that is where we are talking about the community support. So every month, once or twice, we'll be having a community webinar. The community webinar will be actively discussing on market profile, order flow, on wide variety of topics. This webinar is only for the close community, right? Only the one who is already part of the private trading community, they get access to that post seminars. Post seminars there are pre follow-up webinar and post follow-up webinar, and on top of that we have community webinars. That community webinar access is kind of lifetime learning. And every month we'll be discussing 2 hours or 1.5 hours, or at times it can go for 3 hours. There's no duration limit out there. And so whenever I feel that something interesting is happening in the markets or some interesting strategies which we are exploring, so those are the strategies we'll be discussing down there. And the community webinar members are the first one to access any kind of new strategies. Does option OI analysis can also be clubbed with order flow, and does it enrich trade decision? See, generally when you're a scalper, right, we don't even care about what the open interest is doing, or we don't even care. So it's mostly a fast price action. So you don't even time to look into all those information. I would say that. So if you're a fast trader, yeah, it's their own wish if they want to experiment with how the OI in OI data and order flow data changes. You can go and take a decision there. But I would say that the open interest data changes very slowly, whereas the market price action movements happens even more faster. So if you're a scalper out there, you want to do fast scalping or a slow scalping, then I don't think one will be having a time to look into the open interest data points at all. And we don't even care about it. Yeah, you can go and experiment. You are free to experiment on that. I'm not saying that it may not work at all. It might work, it may not work. But we don't have time to look into all those information. When you are focusing on a screen, when you are focusing on the entire order flow picture, when you are trying to decode what is happening inside the order flow, how the buyers and sellers are interacting, what are the scenarios which are happening, where I have to take a trade, where I have to keep a stop loss. When these kinds of things are continuously running throughout the day, you don't have any other time to look into the filtering out by looking into the open interest setup. So you can use open interest setup to take a view, definitely. Okay, I'm not denying that. But yeah, there are tools. I think Bell TPO is experimenting with more on option analysis, IV kind of tools they're experimenting, and you can get a view, right? But when it comes to scalping, it doesn't matter. You can take a view and you can trade the view by using the scalping. That's always possible. But ideally, when the markets are saying long, you have to take a long. When the markets are saying short, you have to take a short. There are no shortcuts here. Or if you want to play a selective game, then at times you might lose a bigger opportunity. Okay, there is a question here. How does one become a confident reader? Very interesting question. I don't know his name, but all I can say that what are the skill set requires to become one. The very first understanding is how the market operates, how the buyers and sellers behave. So unless you don't know how the buyers and sellers interact in the markets, what kind of buyers are entering for the day, where the smart money is coming in, what the dumb money is coming in, unless you don't have a fair idea about that, that's what we call it as a market understanding. How the market itself functions, how the auction happens in the markets. So that is what the market profile and order flow primarily talks about. It talks about market understanding. Then the second set of understanding comes under about how you trade, how you take trading decisions, how emotional as a trader you are, how you're controlling your own emotions. So these are the two factors that a trader has to focus on. The moment you started focusing on market profile and order flow, it takes care of the second thing. Once you have a proper understanding, then you yourself as a trader itself, you'll be able to control your emotions because you know what is happening in the markets. When you know what is happening, when you know that emotional sellers are entering into it, you will not be part of that emotional crowd. So you'll be able to control your emotions there. So market understanding helps you to control your emotion. That is, your self-psychology improves. But when the self-psychology improves, your confidence in your trades improves. And that is not going to happen overnight. That is a practice. Only with that deliberate practice, one will be able to achieve a level of confident trader. Right? So the skill set, obviously, you need to have a better market understanding, and how you trade, the self-understanding is very much required. Can anyone trade only through order flow analysis, especially on intraday basis? Yes, one can do that, but your understanding about order flow will increases if you have add-on knowledge on market profile. Right? Yeah, you can use order flow alone as a standalone tool, but you'll be able to trade bigger opportunities with even with a confidence fashion if you have knowledge on market profile plus order flow, or something like an order flow plus VP analysis, or something like a market profile plus order flow plus volume price analysis. I primarily use market profile to take a view, and there are many times we use order flow to time the markets. So market profile for context and order flow to time those strategies. See, does smart money includes FI, DI, or only it could be retail participants? See, smart money, obviously most of the big orders are smart money because many times big order instructs the markets. They are the one who drive the markets. Where such kind of money, we're not sure, we don't need to know about whether it is FI or DI. The FI and DI, their way of trading is completely different. Their holding period is completely different. Okay, from an intraday standpoint, it could be who is dominating in something like index futures. The DI's activity is very, very less, hardly not even 2% of the 2 to 3 or 4% of the uh, volume they dominates. So with the 4% of the activity, they cannot move the markets. The DI cannot move the index markets, right? Maybe, yeah, maybe they can move it in the cash, but when it comes to the index futures participation, the DI's activity is very, very less. So you cannot spot the DI's activity in order flow. Probably who trades more is the FIs, the retails, the pros. They are the one who trades more, and the retail are the dominant participants. Yeah, equally there are, you know that from the retail community, equally there are smart money is also there. There are a dumb crowd is also there. So we don't need to understand who is dominating there. So as a trader, we don't need to bifurcate whether FIs are coming in or retails are coming in, right? So the intelligent participants are everywhere. The dumb participants are also everywhere. Even in the FI section, you might be seeing some dumb participants. Maybe they are very new to the market. They don't have any fair idea. They come and just because they have money, they might come into the markets, right? So from the order flow, we'll be looking into is where the informed participants are coming in, or what when certain levels are going to break, what that informed participants are likely to do. That is the behavior we'll be discussing in Converge 2019. There's order flow used in scalping on stock futures also. Yes, it can be used in stock futures also, especially the R delta. Couple of people are using in Maruti kind of chart, and crude oil. It can be used on any stocks or any index futures. It's not limited only to index. I trade more of an index future, so my observation is more on index. Yes, but the same principles are applied on stock futures or commodities or currencies, whatever the market it is. Let it be an international market, let it be cryptos. The concepts are more or less the same. The only thing is that a little bit of screen time is required if you want to practice on stock futures. I would say that a 3 months of practice, a deliberate practice, it's what makes you to take a confident decisions when you want to scalp in stock futures. But I would say that always start with index futures, learn to trade with index futures. If you are successful enough to trade in index futures, then you can always move to stock futures. Always it is a step-by-step approach. Does Bell TPO provide information about implied volatility at each price levels? I don't know what he's asking. I'm not sure about it. You have to ask the support team. They are doing some products and options. That's what maximum I know about it. And they are trying to do some strategies on top of the option distribution, the OI distribution, and implied volatility distribution. That's what I heard last time from them, but I don't have much detailed knowledge about it, right? There is a question from Manoj. Differentiate continuous move from a pullback move using order flow. I'm not sure about what do you mean by continuous move and a pullback move. Means you're talking about a trending move and a pullback move. Yeah, we'll be discussing about it in terms of order flow. We'll be talking about the auction likes initiative auctions and responsive auctions, the absorption, how the absorption happens in the markets, what are the places, how you can spot absorption, and what are the absorption based strategies, and what you can anticipate, especially the orders like the institutional execution strategies like iceberg orders or VWAP based orders. How you can understand or how you can spot the presence of the iceberg orders in the markets. So you can understand that how institutional presence is there in that particular day, right? And so there we'll be discussing in depth about the initiative drives and responsive price actions using order flow. Okay, I guess we can stop the session here, and I guess it's been a wonderful discussion with you people. I guess thanks for coming by and asking so many questions, and I hope we all meet in Converge 2019 webinar. I guess you had an preview or at least what we are going to discuss in Converge 2019. If you have any further questions, contact the Converge Meet coordinator, or you can use my Twitter handle. My Twitter handle is marketcalls_. Right? So maybe I type it out on the screen. So twitter.com/marketcalls ends with an underscore, or you just type in Twitter, go to the search option and type market calls. You should be able to get it out there. So here I'll be talking about markets, or mostly we'll be tracking a couple of macros and the happenings in market profile. And in the social media we don't talk about order flow much, but most of my order flow talks happens primarily in the Slack channel. But anything on market profile, something is interesting happening in market profile. Our markets are doing some weird setups. We'll be discussing here in our portal. Apart from that, we'll be discussing some strategies. We'll be discussing about markets. Other than markets, I don't discuss much other things. Very rarely we discuss, but mostly I'm focused on markets here. Right? And thanks for your time, and thanks for coming and attending your Sunday morning session patiently, and thanks for asking such a wonderful question. Thank you again. Thank you. See you next time. See you next time with one more interesting webinar. And thanks for Trade Action for presenting this platform to talk to you awesome people. Thank you.